what it is. Come back up here, retest these 30 and 75 area. Again, like I said, if you're doing 31, it's a little riskier. If you're going to do it at all. So keep that in mind. So that's what they're expecting with the Fed. Again, that's all going to be in. I know this one doesn't have batteries. Thanks for the update there. I appreciate the. You're starting to sound like Brad now. That's not a good compliment. That he tells me like I have no idea what technology is. But hey, but it's okay. I appreciate that. But coming from you, especially, that's very interesting. But thanks. I appreciate it. This is one that doesn't have batteries either. That's amazing. It's just like my computer. Sometimes it works, sometimes it doesn't. You gotta love those glasses, man. Now you know why uh, I don't. Uh, thanks, David. Let me see here. Okay, stop joking around here a little bit. That was funny though. Let's see. We have to see what's coming out here this morning. Chicago PMI. That's right. It's the 31st, the last day of the month. So Chicago PMI coming out here. It does get released a little early to subscribers. So between 42 and 50 at quarter two. Chicago PMI is coming out, and then that's about it. Yeah, there's nothing. FOMC. They're just going to wait for FOMC later on. So Chicago PMI coming out here. They had the ADP coming out already this morning. Precursor to the unemployment number on Friday. So we shall see what comes out then. All right. Well, we inched back up there. Now we're coming back here to our pivot. So if you, obviously the 32 is a little riskier. It's got right up to 30 and change there, or 30.75. Well, if you had a green band, you did okay. All right. So all right, coming back down here to the pivot area, so kind of neutral here. We do have a number coming out here at again, it's a subscriber kind of thing. So it goes out to the public. It goes out to the public at 8:45. So we'll go with that. And again, again, this headset thing keeps talking in my ear. It's amazing technology. You're supposed to just talk to it. I don't need somebody telling me that.
Hey, quick shout out to Don. Hey, Don, are you around?
Yep.
Yeah, he's just working on his headset. If you can be the voice, can be his voice.
I'd get everybody in trouble.
Hey, I just wanted to welcome Don. Don is a great friend of Saul's. He hails from the state of Texas. He is a price action trader steeped in this technique. He knows how to set the levels. He knows how to trade around the levels. He's also added his own twist when it comes to his own trading, and he's pretty darn good at it. So please welcome Don and give him a shout out. Don, if you get a chance, can you repost the levels in there, and then I'll let you pop in and out as you see fit.
Sure.
eminitradealong.com, eminitradealong.com. So for those that are here, those are the levels. You got a pivot and other levels on top and bottom of that pivot. Price action trading. You quickly find that these levels are darn good, but yeah.
Well, we're trading below our pivot right at the moment. Next level of support down there is going to be at 17. I've been in a position, so I haven't done everything that I needed to do this morning. So give me a minute here to get caught up. There we go. That's what I'm talking about. Let's see. Where did we open at this morning? $24. We should have a little bit of support around that 17 area. I was short going into this thing, so I'm getting out of a position here. I had the short from 24, 27, 30. Let's see, where did we actually open at this morning? 25, 24. Actually, I had 3 shorts. I started getting a short this market earlier before 8:30. And I had the 24, and I knew I was going to have the 27. And then when we got up to that 30 area, we were bouncing off that green band. So I had that one too. And we're coming down to the 17 area. All right, just keep your stops in. I'm running behind. I didn't get the 17. I got some of the 16 though. We ought to get back up to around 18, 19. Got down to 1550. If you took the 17 and you're a little squeamish, you can get out. If you're using a 2-point stop, you're still in. I would look to see 20, but I don't know if it'll make it or not. It just depends. But if you got the 17s, you're getting paid off. We're bouncing up here real close to the 20 area. There you go. Yeah, we're going to see if it's going to want to take it all the way back up to that 21 area. I'm for the record, I'm flat. The next level below is going to be at 07. That was a nice little pop. $24. Next level of support down he's got is going to be at 07. Or I don't see anything that I got a bunch of down targets on the downside down in there, but they're still a long ways away. Looks like we're going to chew this 17, 18 area a while. All right, let's see. If anybody's got any questions, feel free to ask. I don't know if I can answer them or not, but I'll give it a whirl. I'll tell you what, yesterday afternoon, how would one say it? Kicked my butt. All right, let's see. Yeah, I think I got some decent areas here. I got levels, intermediate levels. I've got levels all over the place. We got some resistance back up there at 24, 25. We get back above 30. You want to make sure you're at, matter of fact, you're about, we get above 26. You want to be out of any shorts for sure. Now we wait. Let's see here. You know, I don't know. I don't really keep track of it on a yearly basis like that. I will when I sit down to do the taxes, but other than that, I fluctuate in the 80 plus percentile range of wins. You know, I can have a 90% win rate and have 10% loss rate that just eats that up. So it's just, you know, I had these areas this morning to come down at least to the 21 area, and I was willing to do it. And I took these areas for a reason. I took the 24, I took the 27, and I took the 30s. They were all valid reasons. Could it have continued to go up? By all means. But that was a risk that I was willing to take. One of the hardest things probably that I do is have to wait. You know, Saul's got a 7 level down there. I like the 12. If we were to blow through it and get down to the 10 or 11, I might take it. Don't know yet. I'll have to wait till the price action kind of unfolds. Yeah. Maureen, I owe you an Autopalm a gratitude of thanks by mentioning Hugard's book. Autopalms had sent me some stuff, and I kind of like the data that he showed. And I finally got the book, and I'm enjoying it. And for everybody out there, it's the best losers win. And I have a lot of those issues, so that we all do. Excuse me. It's yeah, the best loser wins. Yeah. So far, I'm about halfway through it. I guess I'm enjoying it. I'm going. Yep, that's me. That's me. We're coming back up to our 17 level. I had the 15 down there, but I did not take it. You know, I have Saul's numbers, I have my numbers, I have intermediate areas that, you know, if your risk tolerance is high enough, you take them. But in all fairness, this morning, I'm waiting till we get down to real close to Saul's levels, because his are on the safer side, mine are on the riskier side. But I can tell you right now, 15, 18, 21, and 12, they're all areas that we're going to see probably some kind of reaction at or around. And let's see, what have we got as far as the VIX is still trading at, I think, around 1379. It's come up just a little bit, I guess, because of this downward move. They when Saul gets his headset fixed up, back up and running, I was reading in the book, he talks about one of his heroes, and he traded in the pits, and I was going to ask Saul if he knew him. His name was Charlie D. That's what they called him. Did he know him? I think he's through the years he's told several little stories about Charlie. If that's the same one I'm thinking about. We're just sitting back here trading at our 17 level. I like these little orderly moves down or up. I mean, they're tradable. They're just not out of control. The only problem with these type of markets are that when the volatility comes back, we're geared into lower trading, and it just seems like everything is so fast.
All right. Can
There
you guys
you
hear
are.
me?
Yeah.
I don't know. I put it on the charger like I do every night, and it's I guess now it's working. It might go off again. I have no idea. I just figured I'll try it again, see if it's got enough juice to last me through another hour or so. Hopefully it does. I don't know. Like I said, I put it on the charger every night. Do the same thing every night. Then I don't know why it would just all of a sudden today decides to not work. Well, anyway, it is what it is. But thanks, Don, for chipping in there for me. And obviously, we went down to that 17 area, had a nice little quick pop rotation off of it. Yeah, we talked about Charlie. I think it was one of your days that you were fixing your truck or something that you couldn't. I got the wife working the exercise bike. Don't worry there. The I think it was one of those days you were fixing your truck that we were talking about Charlie.
Was he the big bond trader that lost that $1 million overnight?
Yeah.
Oh, okay.
Yeah. He was that bond trader who was trading at night, and the war broke out, and he told me it was the quickest $2 million he ever lost. The market, and I think I was comparing the times, because that was when the war started, and that was like the first time the market reacted to a war situation, and it was crazy. Now we're getting all these these little fire ups, or I don't know, incidences across the pond there, and we got ships over there. We got half the naval army over there. We got the world coming to an end, and the market's like not doing anything.
Go figure. That's like we have great news come out, market goes down.
Yeah, right. I mean, that's what we were talking about. It's like all this like good news. I mean, all this like war stuff going on, and markets they're totally discounting it and not reacting to any of it whatsoever. All right. So I'm sorry about this headset thing. I have no control over this. If I did, it's a brand new headset too. So, anyway, let's see. We're getting ready for the first Fed meeting of the year today, and like I said, I gave you some of the things that they'll be looking for in their statement, and then obviously he's having his Q&A session afterwards, and the next support level we'll have is down at the 07 area. Intermediate support there, if you're looking for, it looks like 12-ish. I think, Don, you said 12 last week or yesterday or the day before, and I think that was Mike noticed that it was low today a couple days ago, so it might go retest it. Obviously, I'm looking for a little bit of a sell off below that, but hey, it is what it is. Like Don was saying, you take some of my work and you take some of his. Well, he does his own work still, and he has his own levels. And if they correlate with mine, he likes them. He likes them better, and he uses them. Obviously, he's taken my course with me, and I respect his opinion. If he has different areas that I don't have, and look, I can see why he's taking those areas, except like when I give my levels out to in this room, they're a little bit more risk averse than, again, depending on your risk tolerance is always the key, right? Yesterday was exceptionally slow, like we talked about. If you were trading in the afternoon, it did go right down to, well, the high there was the 56, which I think the market got up to 56 and change or 57. So if you were trading the levels yesterday, and then in the afternoon, I mean, just think about it. This is 56 was the high, kind of hung there for a long time, and then when those releases of those earnings came out like at 3 o'clock, it did go right down to our 40 area there, which is our first support level. So, in case somebody was asking about levels, it's one of those things. You just got to trade them. You have to have faith in them. I think they work a lot of times, and so I don't keep percentages. Like I said, I know you want an answer. He told you, he gave you some sort of answer, and it all depends on how you work those and how you manage those, and that's all. That's the difference between, like, here's here's how I describe this thing. I can give, I can make one statement to 100 traders, and 30 of them will make money, 30 of them will lose money, and 30 of them will break even, with the same statement that I would make about a level or about a trade, how you manage it, blah blah blah. It's just the nature of the beast, and that's why when somebody asks me about percentages, it's hard for me to answer, because every trader is going to just trade it just a little bit differently, and that's really the truth. I mean, it's just it's what I've seen over many years. I've traded on the floor, and I've seen many different traders trade different ways, and I can honestly tell you that I can't do what some of the other traders have done. Some of these big traders, they just, I would look at them and say, well, I can't do that. And then somebody would look at me and say, well, I can't do what he does. So you got to find your own niche. That's the most important thing. All right. Hanging here on these lows, it looks like we're under a little bit of pressure. Latest monetary announcements from the Fed. The Federal Open Market Committee will be released at 1 o'clock this afternoon, Chicago time, and many are keeping a watchful eye on the decision that influences mortgages, credit cards, business expansion plans. However, with the central bank likely to hold rates steady for a fourth straight meeting, investors will be focused on tweaks to the language in the Fed statement and, of course, the Chair Powell's post-decision press conference. So those are going to be released later on. The FOMC jacked up interest rates 525 basis points in 22 and 23 to tame inflation. The cost of borrowing money surged, constraining a range of economic activities like mortgage originations, mergers, acquisitions, and stock and debt offerings. Inflation has since closed in on the 2% level, while credit card delinquencies and net charge-offs have crept up, prompting expectations that the Fed will act while the labor market and consumer spendings are strong. It's true. The ADP number this morning, they were expecting 150. It came out at 170. So payrolls increased. So more jobs, I guess. Again, the labor market has been strong throughout this whole move here. That's true there, DL. The DL, is that what you want to be called, or is there a name I can call you besides DL? Because that's all that comes up on my screen. Diego. Okay, Diego. Thanks. And Diego, who's been with us for a bit, says, takes time to see how the levels work. I ask yourself, is this a way I want to trade? Is the risk I'm taking within my risk parameters, and then decide if this is for you or not? I appreciate that. That's true. Again, I don't. Again, it's a methodology, and you have to get comfortable with it, and then once you get comfortable with it, try to take advantage of and then there's ways to take advantage of the situation. So, all right, you can see here the bond market very healthy this morning. Keep creeping up. They're around the 4% yield there. Again, they have nicely come off of their highs, and the bond market here is again a 122 handle. They were down at a 117 handle, so they're doing a very nice job of coming back. Bond market is, and again that quickly rotating down here, and down here to get some stops, and down here to 12. Again, this the little downs area we have 07. That's my next area there that I'm looking at. Market continues to slowly downtick. Low resistance right now would be around the 21 area on the upside. Again, this is pre FOMC, which is going to be released later this afternoon. It's nice that we get maybe a couple opportunities. I would have thought that maybe we would be very quiet this morning. But again, the earnings definitely has been a factor in why we are moving around this morning a little bit here. The earnings from yesterday, as the FOMC Jack, I already talked about that. Policy easing will be a popular topic of discussion at today's meeting, following some preliminary talk in December, and the markets have continue to embrace that kind of chatter, with the focus on when the central bank will start a new cutting cycle. There's still plenty of developments between now and March that could alter the course. Geopolitical tensions have been rising after Iran-backed groups killed 3 U.S. Service members and injured dozens over the weekend. The Houthis in Yemen have meanwhile pledged to continue targeting ships in the Red Sea. The shipping delays worse than the pandemic might mean a resurgence in supply shock that could halt the progress made on inflation. And my headset is telling me my battery's low, so giving a warning. I'm just telling you what it just told me. So if I, hang in there as long as I can here until I don't know, anyway, whatever. So Powell has emphasized the need to proceed carefully based on incoming economic data. All of that stuff is going to be discussed, talked about, and traded later this afternoon if you're going to be around. And be careful. The volatility increases a lot, so be careful. We did mark, and like I said earlier, Don has his own numbers. I said I can see why the 12 would have worked. It was also, like somebody mentioned, a low a couple days ago. So if you did partake in the 12, you did okay. And like I said, I put out the numbers that are a little bit different because I'm taking a little safer level, what I think are safer levels. So, but the 12 was a nice rotation off of it. And again, if you have reasons why you get into trades, that's what we're trying to find here, reasons to get into trades. And there are plenty of reasons to get into trades. The deal is why, what your risk tolerance is and how you can manage those multiple reasons so that you don't overtrade, you don't create too much commissions to the brokers, because that could not a good thing. Try to stay away from that aspect of trading, because the commissions could kill you, and they're quiet. They're the quiet killer there if you overtrade on any particular moment in time. Like I said, it took me a lot to adjust here when I shifted over to trading on the computer. I used to trade on the floor, and my volume was I traded a lot. Let's just put it that way. And I would, they had moments where you could max out on your commissions. So I would, max out, and then my commissions would go from $2 a contract to 20 cents a contract, and then a dime. So that's dependent on how many contracts you trade and how much money you give your brokerage house. So, but so it was basically I could trade a lot and not cost me much. But now that I made the transformation over to electronic trading or screen trading or whatever you want to call this, I had to take that into consideration because I can't trade as much and pick my spots more. And that's what we're trying to do. You got to pick your spots. You got to have good reasons why you're picking your spots, and then act upon them because, whether they're intermediate levels, like we like to call them, or levels that you see that maybe I don't see, and that's fine too. There's no reason why, I'm the only one that sees levels because it's not how it works here. But we show you why we would use a level, and then there's, Don uses a 1 minute chart or 3 minute chart to find different levels. If he really wants to trade, if he really wants to get going, but I don't, that's a lot of trading. But Don's in Texas, so go big or go home. Yeah,
I knew there was a reason. I just didn't know what it was.
Yeah, you live in Texas. Yeah, that's what happens. That's right. That's right. Yeah. So that's what we got here. We got the Fed policy stuff going to be released later on this afternoon. So it's always interesting to see what they're going to do. And there's going to be fallout tomorrow. In case you have to trade this afternoon, you don't have to trade this afternoon. There'll be definitely some fallout tomorrow to trade. Oh boy. Oh boy. Oh boy.
That would be me.
Yeah. Yes, that's true. Diego. Oh, so yeah, a lot of people love Texas. It's a big state. A lot of reasons to like Texas. It's a big state. I've been to Houston. We had a basketball tournament. Actually, this year, the choices between our cities to play basketball during the summer were going to be Houston and Dallas. I'm sorry, not Houston and Detroit. And we're going to Detroit. I don't know why, but we're going to Detroit instead of Houston. So I would have been in the big state. I've been to Houston once. I like Houston. Houston's a nice little town. I've been also. You drive like an hour away and you find these like barbecue places in the middle of nowhere that are awesome. I mean, we got in a car, drove, and literally the guy, we're going in the middle of nowhere. There's barbecue places, just awesome food. That's what you do in Texas. You drive and you find some place to eat.
That's it.
Great barbecue. All right, let's see here. Microsoft shares were largely unchanged after the tech behemoth reported the quarterly earnings. The top expectations aided by the strong results in the Azure cloud business and driven by a new A1 features. We've moved from talking about A1 to applying A1 at scale. So that was one of the companies that released yesterday. Another tech giant posed impressive earnings after the bell on Tuesday, but they were met with colder receptions as Google slid 5.7% after hours, with some disappointment over the advertising sales growth. Google's parent firm also spent heavier on servicers and data centers to power A1, and capital expenditures for quarterly totaling $11 billion. And the figure will only rise in 2024, said the CFO in earnings calls. So that was the reason that we kind of flushed to the downside and continuing to a little flush to the downside here this morning. As Google not happy. Yeah, I know. There's always a fight between Kansas City and Texas as far as barbecue. You're right. You're right. I know about those little intricacies about Kansas City. They always get a little upset when you mention barbecue, and they're like, "Hey, I live in Kansas City. We got barbecue over here. What's wrong with our barbecue? I like our barbecue better than Kansas City's Texas barbecue. What's wrong with you?" I got it. I know. I got a friend of mine who came from originally from Kansas City. As a matter of fact, his license plate on his car is Kansas City. Okay, and he obviously is a big Kansas City Chiefs fan, and he's in hog heaven over what's going on this week and next week.
They having the cook-offs?
I don't know. Probably. I'm sure they do someplace. Oh, there you go. Figures Mike's got to be different in every possible way. He's a vegan, of course. All of a sudden, he's a vegan. Talk about barbecue, he's vegan. If we talked about veganism, he'd be a barbecue guy, no doubt. Veganism. I think I just created a new word for you, Mike. You called me out because I said some word yesterday. Were you here for this?
No.
Yeah, I coined a new phrase, and I just coined another one: veganism.
Veganism.
I'm going to put my own dictionary up there for you. And we're just kind of hanging here on the lows. A little resistance around 21. Next support level we have is down at 07. Yeah, at some point this afternoon, I think it's going to kind of trade sideways, waiting for the FOMC stuff later this afternoon. So, but let's see, maybe we'll get another opportunity here. Again, we are here to wait for trades, kind of be patient, wait for an opportunity. There are some. We got a little resistance around 21 right now. If we get back up there, otherwise, 07 next support level right in here. I got obviously you had the 12 that Don liked, and now we're just kind of sidewinding here down here on these lows. Bonds, though, pretty happy. They are liking what the Fed is going to say. We'll see where they're at. We'll see. They're trading at a mid 122 handle today. We'll see tomorrow, and obviously we'll see later this afternoon. Which way that's going to go. So we'll give that'll be a good indication as to how they're going to perceive what the Fed does or talks about later down this afternoon as far as interest rates are concerned.
Well, a question for you. If the Feds decide to, say, for the sake of argument, raise interest rates, what would the bonds do? Go up or down?
They would technically have to go down.
Okay.
But yeah, I mean, yeah, if there's an inverse relationship between bond prices and interest rates. So bond prices go up, like we're talking about here, and I keep saying that the interest rate, the yield on the 10 right now is at 4%. Yesterday is at 4.07 or 8, and that was when the bonds were trading at 121 handle. So now we're at 122 handle, and it's closer to 4%. So bond prices go up, yields go down. That's what's going on. We were at that, like I said, we were at the 117, 116 handle not too long ago. And then they started talking about maybe a rate cut in March, and then that created this upward push here in the S&Ps, and a nice little rally here in the S&Ps making these all-time new highs.
So if they decide to not raise rates, what would you expect the bonds to do?
Well, they're not going to raise rates. The key here with what the Fed's going to be discussing or putting out there, announcing, I should say, is when they're going to start lowering rates. Again, you got to remember that the market is always is trying to think 6 months ahead. So when the bond market went from rallied here from a 116 handle to 122 handle, they're assuming that the Fed is going to start lowering rates already. So they're discounting the Fed going to say we're going to start lowering rates. So now they confirm that they're going to lower rates, and the only question is here when they're going to start. I think that the numbers are pretty decent. The inflation is pretty much under control. The last inflation numbers were, right there. I think one of them, the PPI number was lower than expected, but the CPI number was right there. Even the European numbers are coming down. So the inflation's tame, and maybe not where they want it to be, but it's tame. It's not going up and slipping down slowly. So they're saying, or the market is the and bonds and the S&Ps are saying, well, I think they're going to start lowering rates. So now the question is when, and that's what they're going to be looking at as to, there was some initial talk of March, which would be the first time that they lower rates in the March meeting. And then some of these like Fed governors who started talking, and we talked about the Fed governors with, right now they're in their quiet period, but the Fed governors give speeches because they get money for their speeches. So they have to, jack up their, they're important people, obviously. So they can get whatever they request as far as their speeches are concerned. And their speeches that they give, they were indicating that maybe March would be too soon. And that's why the market kind of broke a little. And then that's why we drifted lower in the bond market and drifted lower in us. But then they start saying, oh, well, maybe it's going to come back. The numbers are not so bad. Maybe they're going to start doing it sooner again. So I don't know why we're getting this last push here, honestly. And then this last push in the market, I have no idea why it happened 2 days ago. Don't know why they pushed it up here. Maybe I hit some stops to get to those highs. Definitely no idea why they pushed it up here this last time. But hey, we'll see what happens today. So it's all in what they're going to talk about. It's all how Powell suggests if they're waiting for more data, or if they're kind of satisfied with the numbers, and they might be looking, even if he suggests a little bit that they're going to be the numbers are good, that all of a sudden they're going to rally. I think both S&Ps and bonds. If he says they're going to start, if he gives any indication as to they're going to start lowering rates, it doesn't matter if it's in March or April or whenever. I think the market's going to love it. If he doesn't say anything and he says the numbers are still bad, then they might crack him down a little bit. So it's all in his verbiage.
Mm-hmm.
And again, I don't trade that stuff, but I'm just telling you what I read. And I am definitely not trading no FOMC stuff, that's for sure. And I used to trade it all the time. Let's not get me wrong here. I used to wait till 1 o'clock. I'd go upstairs. First, the bond market would be really dead. So we would be, we trade in the morning, and then, we started at 7:20, and so, we trade for until 9:30, and then all of a sudden it's dead. I got to wait till 1 o'clock. So how many times I waited till 1 o'clock? Oh, let me go back down just because the FOMC is going to trade. Let me go trade this stuff right now. Oh, I mean, what a stupid idea that was. Gotta be the dumb. And I did it a few times before I finally realized how stupid I was. The only problem was in the wintertime, there's no place for me to go. That was my only problem. So I had to, what was I going to do? So I couldn't go play golf. And they didn't have simulators back then. Nope. Hitting those stops here below 12. Got 07 here is our next support level. So yeah, they didn't have simulators back then, so I had no place to go. So, all right, well, there we go again. We got down to 875. Oh, I don't understand how I keep missing my little entry points here, my initial entry points. Yeah, we'll see what happens. All right, got down to 875. Coming right down here again. Hit those stops there below the 11, and now we're kind of just hanging here, looking at the 07 area. Again, like to scale in around an area. So depending on your risk tolerance, how you scale in. If you're just taking the 07 straight up, it's fine too. Nothing with that. If you're just trading one lot, trading the 07, that's good. And everybody just trades a little bit differently here. So you gotta trade what's comfortable for you. You come back down here looking at the 07 area. Well, I did not get filled there now. 48 traded, and I did not get filled. I don't know if somebody got filled there at 08, but I did not get filled, and 48 contracts traded. It's just the way I'm going these days. It's even worse than missing it by a tick. It goes and trades my number, and I still don't get in. This is really annoying. Yeah, there we go. This is not good. That's frustrating. I traded 08. I traded 48 at 08, and I had my order in there. I did not get filled. Okay, so if you had it, if you got filled, great. I went down there, 48 contracts traded. I didn't get them. All right, we're coming back down here again to 08. Obviously, we're not looking at the 08 now since it's a new bar. And we technically had a nice rotation against it. There are the levels there in the chat. We have 07 as our next support level. Again, my first entry point, like I talked about, is I scale in a point above and below. So I didn't get filled there at 08, even though it traded 08. It's annoying. I don't know. And if anybody got filled, let me know. It'd be great. I like to know that you got filled, and at least you made a little bit on that quick rotation. The 07 is still good. If you're a little more risk averse, you can maybe, trade it a little bit differently. I don't know. Maybe leave the 06 in there, depending on your risk tolerance. Make a little bit of a, this is where we, you have to understand your risk tolerance and make adjustments according to price action. This is one of those situations. All right. So again, I'm not taking I didn't take the 08. So now I'm down here at 07. And again, like I said, it's probably going to downtick here a little bit. Of course, downtick down to 4.5. All right, getting a little bit of a pop back up here. Got down to that 6 area there. You got filled on the lower end, like I talked about, and doing okay with that. Okay, if you didn't, then just make sure you keep your stops in place no matter what. I'm not going to love any trade we put on. We always talk about that. All right, just kind of hanging here on these lows. Again, if managing your trade, you don't like the price action. 7 got filled there at the 6, and if you're working that, that's fine. If you want to get out, you can obviously get out. We didn't get to 4, got there to 4.25. If you have your 3 point stop against the 07. If you got filled, you got filled. Right now, you got filled, so that's fine. You got to make sure you keep your stops in place. We're not going to love any trade we put on, and then we'll look for our next opportunity. I don't think Don even knows what tofu means. I don't think they sell that in Texas or in Kansas City, to be honest with you. I'm surprised you know what that means, actually, to be honest with you. Again, if you got stopped out, that's fine. We'll look for our next trade at the next level on the downside. What we have is down at the 48.98 area. Again,